Good day, ladies and gentlemen, and welcome to the show on the last day of June 2021. It's Wednesday, the June 30th, 2021. Thank you for tuning in. Glad to have you guys. Now listen, going to get right into the specifics today. I'll give you guys numbers of what I think. Now this is my opinion only, but we're headed toward a crash of everything, not just the markets. And this crash, I believe, is going to occur in the next 360 days. More than likely, not in the first 6 months. But it could happen in the first 6 months. It could actually happen anytime. Anything. It wouldn't take much to trigger it at this point. Everything is so over-leveraged in the markets. Oversold, overbought. It's just bubbles everywhere. Real estate, terrible, big, huge bubbles in the price of almost everything. This is what's driven these cryptocurrencies up to these massive high prices. Of course, they fell back. They were in a bigger bubble back before they lost 50%. But they're still in a bubble. Everything's in a bubble. This is the everything bubble. It's going to burst. So I'm going to give it odds. In the next 365 days, or the next year, starting the first day of the month, I'm going to give it a 95% chance that the everything bubble's going to pop. And I'll tell you when I really think it's going to happen. I don't think it's going to happen this year. I think it's going to happen next year. Somewhere in the first 2 quarters next year. That's when I think it's... I don't think the Fed and them are going to recognize it first. Now, I've been thinking about this very carefully last night, and I was saying in a few shows ago, I thought that it was going to drop over 20% before they would react. I've been thinking about that and thinking about them. And they are not react. They don't react unless there's a really dire situation pushing them to react. And the thing is I think it's going to drop 20%, and they're going to sit back and watch it. But I do believe, and I'm going to put odds on it too, that they are going to step in and try to stop the crash. They're going to of everything, and they're going to do whatever it takes. And it's going to take a lot to stop it because it's going to have a lot of momentum behind it, an awful lot of decompressing, an awful lot of deleveraging through the entire system. And it's going to be very deflationary. So, these guys out there who have been preaching deflation for a long time, by gosh, they're going to think that they were right. And there's going to be a lot of I told you so going on. About the deflation part of it. But it's not going to last real long. And this is going to be the trigger for the hyperinflation. It's going to be what triggers the hyperinflation. Because the deflation, the amount that they've over-leveraged the system now at this point is so great with buildup of credit, which is dead, that it wouldn't stop unless it stopped. It would continue to fall and fall and fall until the system basically melts down completely and everything would come to a stop. I would dare to say that if it was allowed to continue to its final completion and just everything purge itself out and completely flush the system of all debt and everything, I dare say it wouldn't stop until it'll always overshoot too. It wouldn't stop until the system is completely dead and chaos would break out. They can't allow that to happen. At some point, they're going to step in because it's just going to keep getting deeper and deeper and deeper. And it's like, where does this stop? Where do you find the bottom of it? There is no bottom. It would just keep going down and down and down until everybody would be bankrupt in the end. You see, your money out there, your M1, M2, money supplies and everything, it's all just actually debt. So if you start to actually pay off the debt, which is what purging the system is getting the debt getting things down to a normal level, restoring normalcy to the system, having interest rates at a normal amount, and everything. These excesses we're seeing with interest rates so low that you're not making any money when you lend money out. This is an abnormality in the system that's pointing toward the system being over leveraged. The fact that we see negative yields on negative yielding bonds everywhere. This is a sign. This is a sign that we're living on top of a volcano that's ready to blow. This whole thing is like, but they can't let it blow because the magnitude would be so great it would wipe us out. So at some point they're going to have to step in when it's crashing. I've told you guys, 95% chance it's going to crash in the next 365 days. But there's a 97 or a 98% chance that they're going to step in and stop it. But what's it going to take to stop it? It's like, a train is not something that's easy to stop because it's so big and heavy. If a fly goes in front of a train, it ain't going to stop the train. He's going to plow right through it like it's nothing. And that's what a small amount of stimulus is going to do when this thing really gets going. It's going to be like a train. The deeper and further they let it fall, the more it's going to take to pull it back. Boy, it's going to take a lot. And they're going to have to do a lot. I can think of a few things right off the top of my head that they'll probably have to do. One, they're going to have to probably take control of the bonds through something called yield curve control. And then it's probably they're going to have to bail everybody out. Everybody. I wouldn't be a bit surprised if they actually start to buy stocks. So basically what we're looking at is the Fed's going to have to buy everything themselves and become the market, become the whole market in order to restore confidence in the market and bring the market back up from this tailspin that it's going to be in. And when they do that, that's going to be the signal to the world that they can't stop printing. They're just going to have to print into infinity and beyond. And that they will. It's more important. The world already knows that they're going to print to infinity. And we don't see the hyperinflation yet. Yes, we see inflation, but not hyperinflation. What this is going to prove to them, not only will they print to infinity, but it's gonna change the reflection of the whole thing. Confidence is going to be lost at that point in time. Yeah, they will have restored they will stop the bubbles from bursting, but confidence will be lost, and that's when we're going to start to see the real fall in the real big time inflation is after that, and that's when we're going to start to see the real rise in gold and silver. After that, we have to get through this first before we're going to see the massive rallies in the gold and silver and cryptos. I think they're going to go after the gold and silver first, but there's going to be none to buy, and they're not going to want paper. So what do they do then with all their big wads of cash that's losing value daily at that point? So it's going to be a hurrah to the dollar. I see this as being the dollar's last big stand. Let's get in there and take a look at the markets today. Let's open up the charts right here and take a look at what's going on. First thing we're going to take a look at is the silver price. It's up 23 cents on the day so far. 25.96. Boy, she's hovering right around that $26 mark. And it seems like what's happening lately is that they're purging their short positions. But there's such a high demand right now for physical that even though they're purging their short positions, still the price is going nowhere, not much to the downside. It's staying fairly level. So the plaster's fitting the sore. That's the old saying. Or rob from Peter to pay Paul. Basically, is you got one thing that's deleveraging the price down, which is them getting out of their short positions. And on the other side of that, you got tremendous demand for physical. They're almost, I can't see behind the scenes, but honestly, guys, they must be almost out. If they do run out, guys, listen, they'll run out suddenly. Boom, gone. The silver. I don't think they're out yet. They're having an awful hard time though, trying to supply retail silver and industrial demand at the same time. It's like it's going out on two different directions. It's going out for an industry, and it's coming out of there. It's going. And what do they got incoming for supply? The miners. And the miners now aren't producing as much. It's fell back from like 800 and something million ounces a year to like 700 and something million ounces a year. So we see a decline in mining production of maybe about 100 million ounces. But we see this tremendous increase in retail demand, you know? And they were just squeaking by every year when they had 800 million ounces, coming in from the miners to supply industry and retail demand. They were just squeaking by. Now what are they doing with both of these things drawn from the silver pool? And then they want to do all this new green initiative and stuff, and Belt and Road initiatives and everything. That's going to require silver, tremendous amounts of silver. I mean, as soon as you think green, you think solar, and every single solar panel's got silver in it. I'm telling you guys, I see the inevitability of this. I think ultimately there's gonna be a silver shortage. And when's it gonna start? I don't know. It could start right away, or it might stutter away like this for another year or something before we have the silver shortage. But ultimately, I think that's where we're headed, because the mines out there, their ore grades are falling off. That means they have to dig out more earth or more rocks out of the ground and crush them to get the same amount of silver as they used to get. Of course, now at this point, the mines are becoming profitable, because the silver price at about $26 allows a profit margin. When we were down like $13.80 or something, they didn't have much of a profit margin there. Very small, very slim. But now that the silver price is up around $26, they got a small profit margin there to work with, So it is profitable. And so the mines could go back up, like to 800 million ounces a year. But then there's going to be tremendous new demand on all these new initiatives that they're pushing out there. Infrastructure programs and everything else, Anyway, here we go. That's the price of silver today. Gold today is $17.64. It's up $3.20. I think we're going to see this volatility right till the end of the year. And I don't know if they're going to run out of silver or not. I don't think they'll ever run out of gold. They got so much stored away in vaults and stuff. But most of it's not for sale, I mean, it's a possibility they could run out of gold too. But silver's the one we got to really watch, because it's the one that has been, it could go into short supply the worst. As far as I see it, is silver. It's the most potential for going into short supply. Okay, let's take a look at cryptos today. 1396 billion. Was up in the 14s. Fell back a little bit overnight. It was up to 36,000 last night. Now it's 34,320. Now let's take a look at Dow Jones. 34,414. It's up 122 points. My take on it is I think we're gonna set new fresh highs right up until later this year, like until late and deep into the fall. And then I think she's going to start peaking and going along, and then after Christmas and when we move into the new year, it's ready for its plunge. It could be anywhere, I think, in the first 6 months of the new year, the market plunge, and it could be it could be a slow start to it, just a few days come together, like 4, 5, 6 days where the market loses a little bit of steam each day. And then all of a sudden she'll have a big day down. And that'll be the start of it, And it'll pick up speed as it progresses. And they'll be sitting back thinking, oh, this is gonna stop the buyers will come back in to buy the dip or whatever, and they're going to be watching it go down, but it ain't going to stop. It's going to keep going lower and lower and lower, and after a while, they're going to start to panic. The powers that be, watching it, and it's just going to keep going lower and lower, and after a while, they're really going to panic, and they're going to start to decide to put in these programs and stuff to stop it, whatever they have to do, because businesses are going to start failing. Big corporations and everything in the real estate market, everything's going to start to pop then. And they will do whatever it takes, ultimately. But how deep will it go before they do whatever it takes? That's what's running through my mind, is how deep is this thing going to go before they finally come in to stop it? And how much is it going to take to stop it? It's going to take massive. Whatever it's going to be, it's going to take a lot. Because it's like a train going down, it's like a train that's coming down a mountain, and it's got no brakes. That's what it's going to be like. Okay, let's move on now and take a look at crude oil. Crude oil today is 73.15. It's up 17 cents. It's on its way to 80 bucks. And I think the next stop for crude is going to be 80 bucks. I think it's going to make $80 before the end of this year. Move index today, 56.80. It's slowly going upwards. It's heading toward 60. Take a look at bonds and rates. Now, we're seeing some good movement in the bonds to the downside today. 1.44 on the U.S. 10-year. It's down 3.6 basis points. And the U.S. 30-year is down 3.9 basis points. That's substantial. The U.S. 10-year is at 2.05. And finally, we end up with the dollar here, and the dollar is gaining strength today. It's at 92.34. It's, this is an unusual day when you see gold and silver going up, like they have been today, and the dollar going up. And the markets going up. Everything going up is unusual, Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.